Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if companies are truly soaring or just blowing steam. Today, we're diving into a report from MRC Global Incorporated that might just be hiding a few sparks or maybe a raging inferno. Alright, so MRC Global Incorporated, a big player in distributing pipes, valves, and related products for the energy industry, has dropped a Form 8. Think of this as a special announcement, a heads up to investors that something important has happened. Normally this form is for big news like a merger, bankruptcy, or a really significant change in management. The earliest event reported here is the 5th of November, 2025. Now, what is this big news? It seems they've released their financial results for the 3 and 9 months that ended on the 30th of September of 2025. This is where the story usually gets interesting because numbers can paint a very different picture than the press releases. This section is all about how the company has been doing financially. They've issued a press release which is attached to this report, and it details their earnings for the third quarter and the first 9 months of the year. When companies release their earnings, they usually try to put a positive spin on things, but we need to look deeper. So, they announce their results. What are these results telling us? Remember, this is for the period ending the 30th of September 2025. We are getting a snapshot of their performance and how they were doing in that specific time frame. This filing itself doesn't contain the detailed numbers but points us to the press release and an earnings presentation. Now, before we even get to the numbers, the company is loading up on disclaimers. This section is a whole lot of legalese about forward-looking statements. Basically, they're saying, these are our best guesses for the future, but a lot of things could go wrong and make them totally different. They mention risks like integrating businesses, whether they can keep their best employees, getting approvals for something called a proposed business combination transaction with DNOW, and a whole laundry list of global and regional economic issues. Commodity price swings, especially in oil and gas, new laws about climate change, public health crises like pandemics, and even what OPEC is up to. It is a long list. And it tells us they're aware of a pretty bumpy road ahead. This part is a bit of a navigation guide for more information, especially about that merger with DNOW I mentioned. They are telling people that there are other documents filed with the Securities and Exchange Commission, or the SEC, that have more details. They're talking about a registration statement and a joint proxy statement team prospectus. Think of these as the super detailed rulebooks for the merger. If you are a shareholder or really interested, you are supposed to read these because they contain important information about how this whole deal could work out and what it means for your money. They even provide website links and contact information for investors. This is where they list all the extra documents they've attached to this report. It is like the appendix of their announcement. This is the actual earnings press release we keep hearing about. This is likely where the key financial figures are. And this is likely a slide deck that breaks down the financials visually, often with charts and graphs. This usually provides a more digestible overview than the raw press release. This last one is technical. It is about a digital format for financial data that makes it easier for computers to read and process. It is essentially a standardized way of presenting the information from the report's cover page. Finally, we get to the signatures. This is just the official sign, off from the company's authorized representatives. Here we see the signature of Kelly Youngblood, who holds an important role as Executive Vice President and Chief Financial Officer. This signals that the report has been reviewed and approved by the top financial leadership of MRC Global Incorporated. Now, let's do some digging because all these forms and disclaimers are just the setup. The real story, as always, is in the numbers. Since this 8K itself doesn't house the detailed financial tables, we'll have to imagine what the press release and earnings presentation revealed. But given the context of MRC Global's business, we can anticipate what they would be focusing on. Typically, a company like MRC Global, which supplies the energy sector, would be reporting on things like their revenue, meaning the total money they brought in from sales. They'd also be talking about their gross profit, which is what is left after they pay for the stuff they sold. Then comes operating income, which is profit after paying for running the business day to day. And finally, net income, the bottom line. Given the current economic climate and the volatility in the energy markets, we'd be looking for revenue growth or decline. Has demand for their products increased or decreased? Are energy companies investing more or pulling back? If revenue is down, say by 10%, that could mean they are selling 1 in 10 fewer pipes or valves than they did last year. If it is up by 15%, that is a significant boost suggesting strong demand. We would also keenly examine their profit margins. Are they able to maintain their pricing power, or are they having to absorb rising costs? A shrinking gross profit margin, even with rising revenue, can be a red flag. It means that while they are selling more, they are keeping less of each dollar. For example, if their gross margin dropped from 20 to 18%, that 2% decrease represents a substantial chunk of their profitability. It could mean increased competition, higher raw material costs, or simply less leverage with their customers. The report mentions a proposed business combination transaction with DNOW. This is often a huge indicator of the company's strategy. Are they looking to grow through acquisition? Or is this a defensive move because their standalone business isn't performing as well as they'd like? Mergers can bring exciting synergies and cost savings, or they can be expensive disasters. The forward-looking statement section is rife with warnings about the risks of this merger, suggesting it is not a guaranteed home run. They are worried about not achieving expected benefits, losing key people, and regulatory hurdles. Looking at the risks they've outlined, the dependence on oil and gas prices is a massive one. If prices plummet, so does the spending by energy companies, which directly hits MRC Global's sales. They're also concerned about global politics and trade relationships, adding another layer of uncertainty. This tells us that MRC Global isn't just reacting to its own business performance, but also to major external forces that are largely out of its control. Now, for our take, MRC Global Inc. appears to be navigating a very complex and volatile landscape. The press release and earnings presentation, while indicating financial results, are heavily framed by numerous risks and uncertainties. The proposed merger with DNOW is a significant strategic move, but the company itself acknowledges a considerable amount of risk associated with it. They seem to be betting on this merger to create value, but the detailed disclosures suggest that success is far from guaranteed, and the path forward is fraught with potential pitfalls. The company's reliance on the energy sector, and particularly on fluctuating oil and gas prices, puts it in a vulnerable position. While they might be reporting an increase or decrease in revenue for the period, the long-term outlook is heavily influenced by external factors that they can only predict, not control. The sheer volume of cautionary language in their forward-looking statements suggests a management team that is acutely aware of the many ways things could go wrong. So, what is the verdict? MRC Global is in a period of significant transition and faces substantial external headwinds. The merger with DNOW could be a game changer, but it is a high-stakes gamble. Investors should be very cautious, paying close attention to how smoothly this merger progresses and whether the promised synergies materialize. The company's ability to manage its costs and adapt to the shifting energy landscape will be critical. It's not a picture of unbridled growth, but rather one of strategic maneuvering in uncertain times. Alright, that is our breakdown of MRC Global Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future, especially with this big merger on the horizon? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate documents. Don't forget to check out the Discord in the description for more discussions. Thanks for watching. See you next time.